Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Tuesday. I know I said that yesterday. Yesterday was Monday. Totally messed up my days. But happy Tuesday. Hopefully everybody's having a GGD, a great green day in the market. You know I always wish the best for my viewers and subscribers. Speaking of subscribers, guys, our goal is 600 before the end of the year. So make sure you guys hit that subscribe button. So today we closed at $42,592.05. We are up a little over $120 today, which is great. Happy about that. Always great to see a green day. The goal for the year was 40,000. So anything over that before the end of the year, before we can add to the end, we're at our final sprint here. So anything over 40,000, I'm happy with. We can get close to 43. I'll be happy with that as well. But just happy sitting pretty above 40,000 for now. So for the week, we are up $686, up 1.6%. For the month, we are up $385, up about 1% for the month. Then we are up over almost $1,600, up about 3.9%. For the 3-month mark. For the year, we are up over $7,000, up almost 20% in the past year. And then all time, since April 13th of 2018, we are up $10,565.06, up almost 33% since April 13th of 2018. So 18, 19, 20. So 19, 20, 21. So about a little over 3 years in the market here. Not doing too bad, about 10.5% a year, which average market return is generally about 7 to 10%. So we're pretty much matching the overall market here. And keep in mind, guys, we have no tech in this portfolio, which is really what does boost the S&P 500 index. That's generally what pushes that index higher is the tech stocks, Apple being the biggest and most weighted stock in that portfolio or in that index. So that's what really pushes the S&P 500 so high is the tech portion of that index. So we're doing pretty well matching it historically without any tech. Jumping in now to the individual holdings, starting with my favorite real estate stock being Realty Income, the monthly dividend paying stock. 130 shares, closing at $8,700 of market value today. Average cost is right around $67 per share. 22.5% of the portfolio is in Realty Income. Today we're down $113. Total we're down a little over $22, up 0.26%. Dividend coming in on the 15th of around $32, sitting there at $31.98. Then we've got Allstate, my personal favorite insurance stock for this set of months. We have 3 shares, $330 worth of market value. Average cost is $120.94. 0.8% of the portfolio is in Allstate. Today, we are down $7.53, up 2.32%. Total, we're down $30, down almost 9%. And a dividend coming in on the 3rd of $1.62. Now, here's the thing, guys. I'm not worried about my Allstate position. In fact, I would be ecstatic if this dropped down to $60 a share. I love Allstate. Insurance is my favorite sector. It's my favorite type of business, my favorite business model. So I love insurance. So the further this goes down, the more I'm going to buy it. So I love it at this price. If I loved it at 120, I'm going to devour this stock at 111 bucks. So love Allstate, and I will continue to buy it regardless of whether it's the month or not. This is such a great discount on a phenomenal insurance company. I've got to buy it up. Next is Chubb. We have 2 shares, $385 of market value. Average cost is right around $188. 0.1% of the portfolio is in Chubb Insurance. Today we are up $462. Total we're up $982, up 2.6% on Chubb. Then we've got Altria. We have 250 shares, $11,000 of market value. Average cost is $46.90. 26.8% of the portfolio is in Altria. Today we're up $70. Total we're down $314.78, down about 2.7%. So, guys, the gleaming issue with this position is the amount of capital that I have allocated towards this stock relative to the size of the overall portfolio. 1/4 of my wealth is in this stock. And generally that would bother me, but I'm not planning on adding to this position. So the goal was 250 shares. Regardless of the price, I will not be adding it unless it drops to what's the 52-week low? Around I was going to say about $40. So like if it drops $5 or below $40, then I would consider adding it. But at this time, I don't want to add any more Altria. Provides me with great dividend income. In fact, I could buy about 4 shares of Altria forever. Every single quarter, it pays me about 200, and I think it's like 225. So at least 4 shares, around 3.5 to I think it's like 4.5 shares of Altria. But I would rather that $200 pay me and buy a share of Chubb or another share or two of Allstate, because I do want insurance to be the biggest position overall in the portfolio, which it is. Like overall, insurance is the biggest portion of the portfolio, but individually, Altria is the biggest position, and so I want to use Altria to funnel into that insurance, into those insurance companies. So that's really what this is about. Altria is a great way to maneuver my money, as it generates a great amount of cash flow for the portfolio, and then I can put that into the new money that the dividends generate into something that I think is more long-term, right? So that's the goal with Altria there. Then we got Procter & Gamble, my favorite consumer staple stock. I use Gillette every day. We've got 2 shares, around $316 worth of market value. Average cost is $141.58. 0.74% of the portfolios in Procter & Gamble. Today we're up $1.16. Total we're up $33. Up almost 12% on Procter & Gamble. Then we've got Clorox. We've got 2 shares, $345.34 for market value. Average cost is $172.80. 0.81% of the portfolio is in Clorox. Today we are down 25 cents total. We're down 25 cents. Then we've got AbbVie. 75 shares, $9,500 worth of market value. Average cost is $81.20. 22.4% of the portfolio is in AbbVie. Today we're at $55. Total we're up $3,400, up 56.7% on AbbVie. Then we got my personal favorite insurance stock in Aflac, 118 shares. They just did a nice dividend increase as well, from 33 cents to 40 cents. So they're now paying the same amount as Pfizer, but the payout ratio is way better for Aflac. $6,700 worth of market value for Aflac. Average cost is right around $50 a share. 15.8% of the portfolio is in Aflac. Today we're up $16 and change. Total we're up $877, up almost 15% on Aflac stock. Then we've got Prudential Financial. 40 shares, $4,200 worth of market value. Average cost is right around $103. 10.06% of the portfolio is in Prudential. Today we're up to nearly $80, up almost 2%. Total we're up $151.90, up around 3.7% on Prudential, with a nice dividend coming in of $46 on the 16th of December. And then we've got Travelers. So we've got 3 shares of this great insurance company, $470 worth of market value. Average cost is $150.64. 1.1% of the portfolios in Travelers. Today we're up $10.65. Total we're up $18, up 4%, with a dividend coming in on December 31st, so right at the end of the year, of $2.64. So, guys, like I've said in past videos, insurance is already the biggest portion of the portfolio overall, but I will be pouring money into Allstate and hopefully Aflac and, of course, Travelers. I really want to beef up my insurance. I want that to be probably 20 to 30K. Like, I want it to pretty much match my current investment as of right now, my total investment in the portfolio. So let's look overall for the year. We're up, say, 20%. We're going to compare that to the indexes. I'm sure Berkshire's smashing it, but let's take a look. Berkshire is up to 30%. Triple Q is up 28, so it's beating us by about 10% there. Dow Jones, we are pretty much matching, and then S&P 500 is up 25%. So we're 5% behind the benchmark, which isn't too terrible, considering we don't have any tech in the portfolio. I'll take that. I know I'm insurance heavy and real estate heavy, but that's fine. So guys, thank you so much for watching. Remember to hit the subscribe button on my channel, That Dividend Guy. If you guys enjoy the content, make sure you hit the like button and tell me what your favorite dividend stock is down in the comments below. Thank you guys so much for watching, and I'll see you guys tomorrow with another Robinhood portfolio update. Take care, guys.